Red alert, attention, all units, stop everything you are doing right now. I don't care if you in the middle of a trade, a meal, or a conversation. Stop staring at those 5-minute K line charts. Stop checking your technical indicators. What I am about to reveal, and the document I am holding in my hands right now, is far more than just another bank surrender or a minor market adjustment. This is the smoking gun that proves the entire global financial architecture has been a rigged trap for over a decade, and the detonator has just been pressed. At 4:17 p.m. on the 9th of January 2026, an emergency internal meeting minute from the JP Morgan Risk Committee was leaked to the most elite sovereign wealth managers. This document, which I have personally obtained and is marked top secret for committee eyes only, contains 7 words that will end JP Morgan's 40-year hegemony over the precious metals market. These 7 words confirm every whistleblower's warning. They prove that the Department of Justice's criminal investigation is moving into the indictment phase, and they signal a wealth redistribution of biblical proportions. Those 7 words are: gold position poses unacceptable risk, immediate closure. JP Morgan, the giant that clears more derivatives than almost the entire top 3 combined, has just admitted in writing that its gold short positions have become dangerous. They are legally radioactive. They are financially catastrophic. They must be liquidated immediately. Regardless of the price, they are retreating. They are burning their entire commodities desk to the ground to save the parent company from a total collapse. This memo doesn't just mention an exit. It explicitly states they must initiate a forced buyback of a staggering 820 million ounces of gold short positions by the 31st of March, 2026. That is less than 80 days from today. The minutes include a mathematical projection model predicting the final market value. Once this liquidation is complete, the true price of gold will hit a terminal floor of $12,500 per ounce. This isn't TA forecast from a retail bank analyst. It is a liquidation price calculated by JP Morgan's own risk engine. It is the masters of the system telling their governors, the math has finally broken, 820 million ounces. To put that in perspective, they need to buy over 10 million ounces of physical gold every single day for the remainder of this window. The entire world only produces about 120 million ounces a year. JP Morgan needs to swallow 7 years of global gold production in under 3 months. It is a mathematical black hole. This isn't a position adjustment. This is market obliteration. Usually banks exit due to delivery failures or minor regulatory fines. This time, it's because of a Department of Justice criminal investigation. JP Morgan isn't just in a losing trade. They are facing federal prison for systemic market manipulation. On the 7th of January 2026, a high-level whistleblower provided encrypted logs and private recordings. These files prove a planned suppression of the gold price has been active since 2017. Legal counsel told the committee if these short positions are not closed before the indictments drop, the executive board will be buried. They will be charged under racketeering laws. The ultimatum was simple: either exit the gold market now or face total systemic insolvency and prison time. To understand the magnitude of this crime, we have to look at the repo market. This is the plumbing of the world's financial system. In September 2019, the plumbing burst. The Fed had to inject $75 billion a day. In 2020, it was $1 trillion. Now, in January 2026, the plumbing isn't just leaking, it's exploding. The JP Morgan memo reveals they've been using rehypothecated gold. This is paper claims on metal that doesn't exist. They sold the same ounce of gold to 250 different people. It's a 250 to -1 leverage ratio. This worked as long as nobody asked for the bars. But now, the sovereign holders are asking central banks in the East are demanding physical delivery. JP Morgan is staring into an empty vault. They are caught in a liquidity death spiral. If they cannot deliver the gold, they default. If they default, the entire collateral chain of the Western world collapses. The whistleblower didn't just bring rumors. They brought 500 internal emails and 80 recorded phone calls. These recordings show traders laughing about smashing the price whenever a retail buy signal appeared. The DOJ has labeled this the Golden Cartel case. This isn't a civil fine. This is a RICO prosecution. The memo states legal fees alone are projected to hit $5 billion this year, but that's nothing compared to the $200 billion liquidity hole. They have to fill, the Risk Committee was told. The Department of Justice will not settle this time. They want scalps. They want the books clean by the 31st of March, or the handcuffs come out. While this is happening, the credit rating agencies are preparing the guillotine. Moody's and S&P have issued a private warning to JP Morgan. S board, their negative watch status is about to be downgraded by 3 notches. This is a death sentence for a bank. A 3-notch downgrade would increase their borrowing costs by $900 billion a year. JP Morgan's entire profit margin would be wiped out in weeks. They would be unable to provide liquidity to their clients. This leads to a massive bank run by the ultra-wealthy. This is why they are panicking. They are between a rock and a hard place. The DOJ is on one side and total credit annihilation is on the other. They have chosen to sacrifice their gold shorts to save the bank's life. But who is on the other side of this trade? It's not just retail investors. It's the East. China, Russia, and the BRICS nations have been watching this leverage for years. They've built a shadow-following strategy. Every time JP Morgan attempts to buy back a block of shorts, the Eastern central banks outbid them. They are front, running the bank's evacuation. They are physically seizing the metal. They are moving it into deep storage in Shanghai and Moscow. JP Morgan is trying to exit a burning building, but the East has locked the doors and is charging $12,500 for the key. Now, let's talk about the impossible math of $12,500. JP Morgan's risk engine ran a Monte Carlo simulation. Scenario 1, an orderly exit probability, 2% price, $8,400. Scenario 2, the systemic cascade. Probability, 65%. Price, $12,500. Scenario 3, the total decoupling. Probability, 33%. Price, $18,000 plus. The Risk Committee has adopted $12,500 as their target execution price. They are mentally and financially preparing to pay $12,500 for an ounce of gold. They will do this just to stay out of a federal cell. They are telling their governors, we will pay whatever it takes. You need to understand the gamma flip about to happen in the options market. Billions of dollars in put options were designed to profit from gold staying low. As JP Morgan begins to cover, those options lose all value. Market makers have to hedge their losses by buying more gold. This creates a self-reinforcing feedback loop. Buying leads to higher prices. Higher prices lead to more hedging leads to more buying. It is a vertical price spike. Once we cross the $4,000 barrier, the algorithms will take over. High-frequency trading systems will detect JP Morgan's signature, and they will pile on. It will be a feeding frenzy, but here is the most sinister part. Section 10, Retail Psychological Warfare. JP Morgan knows they cannot win a bidding war against China. Their only hope is to get the gold from you. They are coordinating with media outlets to flood the airwaves with sell signals. They want CNBC to tell you that gold is in a bubble. They want gurus to say, the 2026 rally is over. They want you to take your profits and run now. They are even paying influencers to post about selling their gold for a gain. Do not believe them. Every ounce a retail investor sells is an ounce JP Morgan buys at a discount. They are begging for your gold. They need it to settle their criminal liabilities. If you sell at $3,500 or $5,000, you are giving them the ultimate gift. You are letting them off the hook before the $12,500 endgame. Think about the families in Venezuela or Weimar Germany. They didn't survive because they were smart traders. They survived because they held the metal. JP Morgan is now in the same position as the Venezuelan Bolivar. They are holding a paper promise that is being rejected by the physical world. The memo proves they know the end is here. They are choosing to be the first ones out the door. In the world of finance, if you're going to panic, you have to be the first to panic. JP Morgan is panicking right now. They are willing to pay $12,500 to save their lives. This isn't just about gold, it's about the sovereign debt trap. The U.S. deficit is $2 trillion a year. The interest payments are $1.2 trillion. The only way the government stays solvent is if the Fed prints. But every dollar printed makes the gold shorts more expensive. The bank is being crushed by the system it helped build. They are a canary in the coal mine for the entire banking industry. If the Bank of Kings is surrendering, what does that tell you? It tells you that the exit is the only rational move left. The countdown to the 31st of March is relentless. Every day that passes is 10 million ounces closer to the final default. Physical gold premiums are already decoupling from the paper price. The screen might say $3,500, but try to walk into a shop and buy a bar. The real price is already pushing $4,500. That spread is the sound of the system breaking. JP Morgan is desperately trying to close that spread by buying everything. The 12-page minutes conclude with a cold directive. Liquidate all derivative positions regardless of market impact. Prioritize physical acquisition over price optimization. Failure to comply by month and will result in immediate board restructuring. That is corporate speak for you are fired and going to jail. They are terrified. The predator has become the prey. For 40 years, they used the gold market as a piggy bank. They sold more gold than exists on the planet. And the world finally called their bluff. The war is over. JP Morgan has surrendered. The memo is the white flag, 820 million ounces, 80 days, $12,500. The math is locked. The execution is mandatory. If the masters of the system are willing to pay $12,500 to save their skin, why would you sell for less? The countdown is on. The vault doors are slamming shut, the 31st of March, the day the paper gold illusion dies. If you want my research and private breakdowns, join us. We are tracking the JP Morgan buyback in real time. Click below to join our inner circle. Lock in this generational transition before the window closes. The clock is striking midnight. The premiums are exploding. The vaults are going empty. Move now, you have been warned. This is the final warning for the digital era. Secure your wealth, protect your family, exit the system before it exits you. The next 80 days will determine the next 80 years of your lineage. Do not be the one holding a paper promise when the world demands physical reality.